Oof, who had a good day today? Very, very beautiful day in the market. This was the second day in a row where we saw a strong rotation back into tech and tech innovative plays. And if you've been reading our morning briefings, you know that I've been talking a decent amount about how historically April tends to be a period where we get more of a springboard effect. And with that, I want to talk to you about the plays that I see as having a very high likelihood of doubling. And I also, of course, want to give you some updates on our other major plays. And the only thing that I ask in return for this video is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, in terms of updates on our plays, we talked yesterday about Discovery, how Discovery was overly beat down because of the hedge fund kerfluffle, and how it was greatly oversold and looked like a clear buy in my opinion. Discovery has a lot of great content and they're going to be competing in the online streaming niche. And Discovery's Class A shares, while they continued their slow and steady increase today, however, Discovery's Class B shares, oof, really took off today. Up over 100% at highs. It went above even its pre-breakdown highs. From like the low 70s in the morning to 150, totally whack. So this leads to the question, like, what's the difference between classes of shares? Well, a company, when they go public, may decide to have different classes of shares in order to create a power structure that favors those who are inside the company. That way they can maintain power but also raise capital. In the context of Discovery, they had three classes of shares. Class A, under ticker symbol DISCA, are shares intended for the public market, and each one has one voting right. Class B, which was the class that really rallied today, are shares that get 10 votes each, but 95% of these shares are held by one insider. Class C, of course, has no voting rights under DISC K. Now you may wonder, well, why would I buy Class A shares when they have less voting rights than Class B? Well, the reason is one thing: liquidity. If you're an individual trader or even an institution that's trying to invest in a company, you want liquidity. You want to be able to move in and out. You want accurate pricing. You want something that a lot of shares are being traded, whereas with DISC B, there's not very many shares available. A lot of them are owned and stagnant, and the extra votes don't actually matter anyways. Why? Because 95% of these shares are controlled by the insiders. So even though you may get more voting power per share with the DISC B shares, it still doesn't matter because the company is structured in a way that you still wouldn't have enough votes to make any difference. Most of the votes are concentrated outside of your control and they can always majority overrule you. So net in effect, it doesn't really make sense to buy DISC B instead of DISC A. So why did DISC B take off then? Well, two words: short, squeeze. Discovery has a massive amount of shorts attacking it. And because DISC B is more thinly traded than DISC A, it becomes a much easier short squeeze candidate if enough people can get together and buy into it. And that's what we saw today: a massive amount of individual retail traders and or small funds piling into DISC B, forcing shorts to close their position and causing it to rally up massively. People knew that Discovery is undervalued, so they said, okay, let's come together and crush these damn shorts. So while economically it didn't really make much sense for DISC B to go up extremely higher than DISC A, you could think of it as sort of getting GameStopped. In the long term though, I would say DISC A is probably where you want to be. Take some short-term movements on DISC B when you see opportunities, but I think that you're going to be much happier if you buy into DISC A at these prices instead of buying into DISC B. Okay, Mara, lovely Mara, up very nicely today. I don't need to tell you how many times we reiterated buying this on the dips during the last couple of months, and really since the beginning of the year. For folks who watch the videos and for folks who read my briefings, I've mentioned this one so many times, it's just ridiculous. And so many of you did the work on this play and rode the wave, and today Mara once again came through for us. I totally get it. A lot of people get sick of hearing buy the dip, buy the dip, buy the dip again and again as these stocks keep dipping. But think about this. Let's just say that you don't get the perfect dip buys. You see something's undervalued and you just keep buying different dips. Well, in the end, if your analysis is right and this really was a valuable play, well, you're going to come out on top. Buying dips brings your average down and also allows you to lock in profits during the uptrend. It sucks, but since we called this out in the beginning of the year, I've seen so many people lock in losses on this one because market psychology is such that in your mind you're thinking, okay, well, I'm not going to be convinced to buy it until everybody else has bought it at all-time highs. And then I'm not going to be convinced to sell it until everybody else has sold it once it got back to lows, which is the opposite of what you want to do. Obviously, it's easy to say that in hindsight, but we've been saying that for the last couple of months. You want to make sure that you're buying these at dips, keeping your conviction, and then stomaching through the uptrend. The better deals you can get on these value plays when they're dipping, the better. We're going to have another period where Mara sells off and people are going to be like, no, not this time, Charlie. It's not going to come back. That happened the last 5, 6, 7, 8 dips on Mara. The key is you want to get in at a dip. I know it can dip lower. That's fine. Average down more. If you can't average down more, that's fine. Wait until you get that recovery. There's going to be periods of time where you've put all the capital you want to put in the position and then you just gotta wait and rest on your laurels. Sometimes you have to be patient with these plays. Oof, today was a good day for the green tech plays too, but you want to keep these on your radar, folks. We talked about these just yesterday as being very, very undervalued and ones that are going to come back the fastest when the tech rut ends. They were up huge yesterday, but they're also up huge today as well. SunW up 20% at highs, Gevo up huge, FCell up huge, and others won huge as well. very nice to see that. Lots of upside left, folks. I know that many people get whiplash from buying so many W-shaped recoveries, but this sort of volatility is a gold mine. Even if you can't get the dip perfectly, if you could just buy it different parts of the dip and then you lock in profits when you get back to the uptrend, hey, you've had a pretty damn good show. This is what being dedicated to the process means. VUSI, our augmented reality play. Of course, VUSI was quite the doozy on their share offering just a week or so ago, but we said that VUSI is going to be providing shareholder value as a result of this offering and that you don't want to give up on VUSI. Very good dip buy candidate if you're willing to stomach some downtrends. And today it recovered a decent chunk, up over 18% at highs. The last play I want to recap is YVR. This was an NFT runner that we've been talking about as a buy the dip play, and we briefed on it this morning again at 4-ish a share on an announcement that they were creating a multi-token IP platform with CurrencyWorks. But again, as we've talked about with this play in the past, the key with this is not so much falling for the catalyst. It's recognizing that, hey, this is a hype play. That means you want to get in, you want to get out. It's going to sell off again, and then in the future, it's going to run up again. So the key is after a huge uptrend, wait for it to dip, get a very, very, very good and juicy dip. Have it drop a catalyst, show some signs of recovery, and then pounce. Okay, now it's time for our These Will Double plays, and I want to start with Skills. SKLZ is our streaming service play that we did a huge breakdown last Friday on. I have a price target of about $30 on this bad beaver. If you could snap this up under 20, you're in good shape. I love their business model. I love the success they've had so far. I think that it's very hard to argue that this isn't a clear buy, and I have a complete breakdown video linked below that I did on Friday. So if you haven't watched that breakdown video, I highly recommend it so that you can see my full thoughts and breakdown on this company, because you want to make sure that you understand this before you buy it. The other plays are charging station plays. So during the last couple weeks, I was telling you guys, make sure that you're watching charging station plays. Make sure that you're getting some good deals on charging station plays. I said we're going to have a couple months of rockiness, and then towards the end of the year, it's going to become clear that these are huge winners. Why is that? Well, because they had rallied up in the beginning of the year, specifically because of the Biden administration's policies to prioritize charging station infrastructure and EVs. But because of the overall tech panic, people just totally forgot that. They threw that out like last week's goose. However, today we got a good taste of what it's going to look like when these really come back, and it rewarded people for getting good dip buys. ChargePoint did very, very well today. Now it's gone from lows at 20 to 27. My price target on this one remains 40. CLII, very nice. Blink, very nice, and all of these still a chunk below all-time highs. If you have a stomach for volatility, these plays, in my opinion, are still very, very cheap. Don't confuse short-term panic with an impact on long-term value. Okay, iPod and IPOF. Now I have to say, one of the biggest casualties of the overall interest rate crisis, the overall panic, were SPACs. SPACs were on the far edge of the speculative category of innovative tech. So by nature, they got hit the hardest. However, that doesn't really change the value proposition. It changes a lot of the enthusiasm, but not the value proposition. iPod and iPOF still provide a very, very good value proposition for traders, but now they're very close to their SPAC floor at $10. And you look at their sister stock IPOE, holding well above its floor at $10, over at $16. Why is that? Well, because IPOE already has an SPAC partner, SoFi. iPod and iPOF are likely to get a similar caliber SPAC partner. And when they do, I see them trading at a premium. The question, in my opinion, is not so much if, but when. And at these prices, I mean, this is a great buy. Okay, lastly, I don't want to bring the mob out with the pitchforks, but PLTR. I know that PLTR has been slow. It's been a tease, a backyard bully, a little dirty dog. But the current trading period isn't something we haven't seen before. In fact, towards the end of 2020, we had a similar trading period. I have an unwavering bullish outlook on PLTR. And you also look at one of the biggest stocks that ARK has been buying in March, and guess what it is? It's PLTR. You look at Palantir's partnerships, even in the last month or so, such as Amazon Web Services and their massive value add to their ever-expanding client base, and it's hard not to make a good case for PLTR. I know it's easy to see some other shiny plays like Mara and say, why is PLTR not doing what Mara's doing? Sometimes you have to let yourself off the hook and be patient. You're gonna have some plays that get valued very, very quickly and other plays that take longer to get valued accurately. And in the market, you're not always gonna know which one's which ahead of time. So I would say if you are in PLTR, if you're looking to take a position, PLTR is a high conviction play, and I haven't changed any outlook just because the rest of the market hasn't wanted to give it any sugar. Okay, now for the requested ticker of the day. Charlie, what is going on with WAFU? So I was impressed to see WAFU do another 68% jump today. This was a chart hype play that we called out during the last run and reflected on during Sunday, but the key is always locking in profits after these uptrends because they never last. You do not want to get caught holding these short-term plays. But to be clear, congratulations to folks who caught today's rally, and this wasn't a play that I even had a focus on this week. So I love seeing folks who use our sort of mindset and way of looking at the stock market to take advantage of a lot of these plays. plays. The goal of any YouTuber or any person who wants to talk about the stock market is that those who watch and listen to their videos actually go and think for themselves and do even better than the people that they listen to. Obviously, I provide you my thoughts and my foundation. These videos in ZipTrader U, on our briefings, everything. But the idea that some of you are going and building your own foundation and taking advantage of a lot of these plays that I didn't even see coming is really great. But the one lesson that I'm just going to have to reiterate here is that you do not want to hold and hope with these plays. When you see a play that likes to pump and dump like this over and over again, you do not want to get caught holding it. You want to lock in profits. Anyways, folks, if you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade, would like access to our daily morning briefings and of course our price targets list, I'll go ahead and put the link to ZipTrader U below. If you're wondering what broker to trade these stocks on, well, Webull will give you some free stocks if you sign up and deposit with our link below as well. They are a fantastico broker for new and intermediate to advanced traders alike. There's tons of great scanning tools, great resources for doing your due diligence, and of course they are commission free. So lots of things to consider if you're looking to join a new broker. Anyways, folks, have a great day and I'll see you in the next video.